real estate sector as a whole, if we can just get a heat map of all the real estate companies that are in focus today, because there is pressure that is mounting in on that front. There you go. Except a Suntec Realty, all of them down in the range of almost 1.5 to 5%. Specifically, Oberoi Realty, Godrej Properties, Macrotech, the ones which are Mumbai focused are actually bearing the brunt in today's day. And this is after the Maharashtra government has gone ahead and hiked the ready reckoner rates for the financial year 2026 by 4.4%. Now, to get you more details on the same as well, overall these rates will be effective from the 1st of April, and the initial speculation had suggested a 10% hike. The last time the rates were hiked was back then in 2023 by an average of around 5%. Overall, if you see in terms of Maharashtra, they've collected almost 57,400 crores in property revenue in FY25, and the collection had exceeded their target of almost 55,000 crores. Now, in terms of the implication of these higher ready reckoner rates is, one, the property costs will increase. Secondly, the stamp duty charges for the buyers will go up as well. Now, that is something which will probably hurt demand. Now, the construction cost will be escalated as well, though the stamp duty percentage remains the same, so it's just the absolute number that will increase. And it's affordable housing that could see a bigger hit. And to be noted that this has been a segment which has been slightly drooling under pressure right now. So again, further hit to this, how big it will be and which companies will be impacted is going to be interesting. You have the percentages in terms of which city has seen what kind of an increase on the screens right now. So it ranges from almost 6.8% to almost 10.2% on an overall basis. And the revised rates also vary, but the average is around 3.7 to 3.9%. In fact, let's also welcome in Ashutosh Limai, Regional Director at Anarok Group, and my colleague Anushri will be joining us on this conversation as well. Ashutosh, good afternoon and welcome to the show. My first question coming to you is, was this something that was warranted? Because I mean, the EV tax that the government has gone away with to an extent, I think somewhere they had to make up for this. So how do you see the impact on an overall basis?
Good afternoon. Well, I think this was expected because the ready reckoner rates were not increased in last 2 years, whereas the market prices for residential in all urban centers, particularly Mumbai metropolitan region, Pune, and other cities of Maharashtra, the residential prices had gone up in last 2 years. So I think it was expected, and the rate with which it has been increased, in my view, is fairly reasonable. The rate of increase of ready reckoner rates is lower than the rate by which the property prices have gone up in last 2 years. So what does it mean? It means that the stamp duty that the buyers have to pay will be more now. But the overall impact, in my view, will not be that high because the market rates were anyway much higher than the ready reckoner rates. So it's more of catching up with the market that has happened.
Hi, this is Anushri joining in. I wanted to also ask you, now the initial expectation was around 10%, but against that we are seeing around a 5% of an increase. So it is, although there is an increase, it's a moderate kind of an increase that we are seeing from last year. So I want to understand from you, what is the overall impact that you see firstly for the developers and also for the consumers which are there, because the major hit which is expected is on the affordable side is what we are seeing. So just wanted to understand your overall take on this.
Yeah, the overall impact, as I said, will not be significant, but for the affordable housing segment, where the buyers are sensitive to the total outflow they have to incur. I don't see property prices getting impacted because of the ready reckoner rate, because they were anyway higher than the ready reckoner rates. For affordable housing, which is typically 40 lakhs, 50 lakhs, up to 80 lakhs, in Mumbai's case, anything which is less than 1 crore, there the sensitivity is higher. But at the same time, other factors such as expected drop in the mortgage rates can balance this out in near future. There are cities which are at the cusp of becoming metros, cities like Nashik, Kolhapur, Solapur, Sambhajinagar, there the impact could be felt a little bit more because they are more price sensitive markets. But the big metros, Mumbai, Thane, Navi Mumbai, Pune, I don't see much impact because of this hike.
Okay. So, Ashutosh, from a developer perspective, then, are you saying that, I mean, obviously, your luxury is something which is not going to be really impacted on the back of this. How are you seeing affordable housing as a segment being impacted? Because that has been a segment which has already been ruling under pressure if you have to compare the three. And if so, which are the kind of companies which might see an impact?
Overall, in the last 2 to 3 years, the activity in affordable housing was dropping steadily. So that is something that one has to address, how to entice and incentivize developers to come back to building more affordable housing. There are other factors such as getting infrastructure ready in the peri-urban areas so that those areas become livable. There are other tax incentives that are available, etc. Merely the ready reckoner rate is not the sole factor governing the future of affordable housing. Having said that, the peri-urban areas of all metros, where the property prices are relatively lower, there one might see a little sensitivity about this ready reckoner rate increase. But from developers' perspective, because in the last 2 years there was enough demand in the higher ticket sized residential market, many developers moved away from building affordable and they launched more projects in the luxury and mid-range projects. The market dynamics will play out. The market is cyclical. So once equilibrium is reached in the luxury and mid-range residential, developers will focus once again on affordable housing.
So, Ashutosh, my question to you is, one, the hike is lower than majority of the predictions that were expected. The key expectation was around 10%. It's way lower than that. But would you say it is significant enough to influence the market trends in the coming months?
No, my view is the hike is not significant enough to reverse any market trend or influence the market in a big way. Had it been 10% or upwards, as some of the industry experts were anticipating, that would have been some sort of an impact. But 4 to 5% increase in urban areas is not going to make a significant difference for the property market.
So Ashutosh, considering now the overall picture that we are seeing for the fourth quarter, now what we have seen in the last couple of months, there have been a lag in terms of where the approvals are concerned, which has led to a slower pace of launches which were there. I want to understand your overall outlook for the fourth quarter for the real estate sector. How are you viewing these trends in terms of where the launches are concerned, where the demand supply trends are, and how this would in fact result to price realizations which are there? Do you expect a higher spillover in the first quarter of FY26? Just want to get your view on the same.
Yes, I think there are factors that prompt us to believe that next 2 or 3 months we will see drop in new launches because the approvals are taking longer. The market dynamics are such that most urban centers have seen a significant price growth in the last 24 months. So we anticipate some sort of a plateauing of pricing that will take place. In the last 2 years, there are a number of projects that got launched. So the supply is substantial. While the demand is steady, one would anticipate that once the equilibrium reaches of demand and supply, it's only after that that we will see a surge in launches. Our view is that the prices will be stable or only marginally increase. Fewer launches in the coming quarter, whereas the absorption will be steady.
Right. So that's an interesting take coming in. Thank you, Ashutosh, so much for joining us on the show and sharing your views. Thank you, Anushi, as well for joining us on this conversation. Let me also welcome in Sharmila Joshi. Sharmila, good afternoon and welcome to the show. Your quick take with regards to real estate at the ready reckoner that has been increased as well. How are you seeing the impact?
I think more than the impact of the rate, I think overall what we're hearing is that there is a bit of a slowdown and that we are seeing lesser buying. So now you'll have to actually watch the combined impact of the rates having gone up as well as what you see in terms of sales data for a lot of these companies. So a lot of them have put out very sort of aggressive targets, and I think recently there was also a report that sort of said that I'm sorry if I'm getting the company wrong, but I think it was DLF that the outlook was very positive in terms of the data that they had shared going ahead of what sales would be, etc. So I think I would really be closely watching that because we're already sensing a little bit of a slowdown as far as sales is concerned, and that along with this hike, how it actually impacts sales numbers is something that you would now be watching because this sector has had a tremendous run up. And it's a very important sector when you are talking of markets as a whole in terms of the kind of employment it generates and the kind of indicators it gives. It's a very, very important sector. So it needs to be tracked closely. But that said, data over the last couple of months seems to suggest a bit of a slowdown.
Got it.